Hello, everyone. Welcome to Chowe MK. Today date is 2nd of April, 2026. Um, I'll be speaking about time frame in trading. What are time frames in trading? As you know, our life time frame is everything we do. Like time, we are connected to the times. So everything we do, we achieve that around time. Time is very important and critical part of our life. Let's say everything is time. We don't have time to do this. We need to do this by this time, finish by this time, so and so. So in trading, special Forex, we also have times. Everybody have different times to trade. We don't like it's all depend your schedule. Some people have full day in their hands so they can do what they want to do. They can do most trading. Some people have only few hours in a day to trade. Some people have maybe only one, maybe you can say 1 hours a day to trade. Some people only have like 1 to 2 days in a week to trade. Some people have uh, 1 week in a month to trade. It's like different times. So trading, especially in forex, so it's very easy. So it's suitable for everybody, regardless the time you have in your hand. You know, you have all day, you can trade. You only have few hours in a day, you can stay trade. You only have 1 to 2 days in a week, you can stay trade. So yeah, so I'll be explaining what are time frames in trading and what the best times for you and I as the beginners to be the best time frame to be trading with. So until we get more knowledge or more experience in our trading, then we can start acting like pro. But for the meantime, as we will trade the recommended times for the beginners. So yeah, let's get down to it like I always do. Disclaimer, and I am not a professional advisor when it comes to any financial, regardless what it is. This channel or this page is educational only, nothing else. Don't take my word for it. Whatever I said, you must verify it and seek knowledge before applying what I am telling you or what I'm saying or what you heard from me. So let's just down to the business. No, we don't have much time. Again, time. All right. Yeah. Okay. So we have different times. 1 minute scalping. Scalping is the 1 minute time frame. Those that you have all day sitting in front of your computer looking for trade and different small opportunity, less small pips, but you look for a little trade. You enter in about 5 to 10 minutes, you out of the trade immediately. That's called scalping. So they search out different chart, different during a day, looking for different small opportunities, small pips, 10 pips, 20 pips, you know, just like that, 3 pips, 5 pips trade. So the people that do that, we call them the scalpers. They scalp during the day. Then that's what 1 minute from 1 minute to 15 minute time frames. Those people are scrapping. Yeah. The 1 hour time frames, we call them. people that trade 1 hour time frame, which would be you and I mostly, and one we call them day trading. So we try to look for a few picks during the day, uh, you know, so that will go on for 1 hour or even, you know, 30 picks, 20 pips, you know. So that's our day traders, like, or 4 hours. So the 4 hours are the stream trading, like 1 to 2 days, so 1 to 2 days in a day, in a week. So we just some pips, look for some good opportunity. We follow the trend. It's more stable. And day traders are the daily time frames. So they acquire position trading or long-term investors. So they look for maybe just few enterings during the in a week, maybe in a month, just 1 to 2 entering or three, whatever. That's from day to monthly, to a month time frame. So like I always do, I put everything into a text so that you're able to write your own note. You're able to take your times and go through it, read it, and so you can understand it better. Because first time listening to something is very hard to pick it up. If you go over it again, it's easy to pick it up. So phase one, we stay on phase one. Remember, this all part of the learning process. What is Forex? Okay, we on phase one, the beginner. What are time frames in trading? Well, time frames are equal how far fast the chart moves. 1 to 5 minutes, the chart move very fast. It go up and down quickly. I'll show you the example later on. Uh, 1 hour's time frame are medium traders. So the chart can move pretty fast, but not that quickly compared to 1 to 30 minute time frames. Uh, Daily time frame, those are the long terms. So it's very hard for you to see the chart moving. It's every 24 hours, knee bar or candlestick form on a platform, on a chart. I mean, yeah, the tip, the beginners who use 1 hour or 4 hours time frame. That's you and I. So we have to use that time frame. I recommend that, and many professionals will recommend that to you. Because why? Number one, you and I, we are working. We work. Most of us work 5 to 9. 5 to 9 during a week. So we don't have much time in our hand. So we try to stick with 1 to 4 hours so that we get the few hours we have, and we can look onto our chart and see if there's any opportunity present themselves to us. So we should try to stick with that 1 to 4 hours. But if you feel like you are more confident, and you can move to lower time frame if you really want to, if you have that time to sit in front of your computer and be searching or waiting for new opportunity, then go ahead, you know, and do it. Uh, Time frames in trading define the specific duration each candle or buy representing on chart, ranging from seconds to months. They are crucial for analyzing price movements, identifying trend, and determining entry and exit points. With higher time frames showing broader trends and lower ones displaying thinner details. So I will show you a few minutes from now. Just bear with me. The key types of trading time frames. Long term, like I explained earlier on, long term, monthly, weekly, daily. Used for identifying and swing traders aiming to capitalize on established trends over several days or weeks. Short term, 15 minutes, 5 minutes, or 1 minute, used by day traders and scalpers for high speed, quick gain trades. Trades requiring high precision. So, how to use time frames effectively? Multi-time frame analyze traders often use a top-down approach, such as analyzing a higher time frame, example daily, to identify the overall trend direction. Then using a lower time frame, example one of 15 minutes or 30 minutes to refine entrance and exit. Trend alignment effective strategies involve aligning lower time frame and triggers entrance with higher time frame trend to increase accuracy. I will just be with me, guys. I will show you all that. Yeah. Choosing the right time frame, the choice depends on the trader's styles, with deal traders preferring 15-minute to 4-hour charts. Why position traders look at daily or weekly charts? Common pitfalls. Over trading looking at too many time frames can cause confusion and excessive trading. Ignoring higher time frames, scalping, or day trading without checking the brighter trend can lead to significant losses. Commonly used time frame abbreviations is 1 minute, 5, 15, like that. 1 hour, 4 hours, 1 hour, 4 hours, daily, 1 week, monthly, weekly, or monthly. So, guys, that's just there about time frames. And so you can go back to it, review it, and understand it better. So let's just get down to you on a chart, and so I can show you better um, what is it. Yeah. So yeah, this is my platform. I'll show you the time frames. Let me see if I can get a better one. USD without one. Yeah, so here we are on a platform. As you look on the top here, on the top left hand corner here, see what M1, M5, M15, M30, H1, H4, D1, W1, MN. So this mean 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, 1 day, which is daily, weekly, and monthly. So these are the time frame right here on the top. Most of your broker, MT4, metal, trader, uh, metal trailer, MT4 and metal trailer platform. So you will see the time frame here on the top. The so as you know, as I explained to you earlier on about the time frames, like uh, the time frame where are they representing, I already explained that to you. So if you check for the short, the scalper or scalping, those people that scalp throughout the day, they will be on this platform here, which is 1 minute time frame. As you look here, today we today date is 2nd of April 2026. See here, the daily it started here. The market open here, signaling time 8 a.m. As you see that, this is each of these candlestick here represent 1 minute. So every time 1 minute pass, one of these candlestick will form on a chart. Every time 1 minute finish, one of them will close. New candlestick or new bar stick will form on the chart. So that's 1 minute time frame. So throughout the day, if I were a scalper, and then I have all the time in my hand to trade, and I'm in my trading room. So whenever this signal comes, it will give me alert. It will make a sound. So if I were to check my computer and see that I want to take that, take that, take that, take that, take that. How many signals is that? 1, 2, 3, 4, 5. It gave me 5 signals, 24 hours. I've not gone anywhere yet. It opened 8 a.m. It's almost 2 p.m. now. That's like almost how many hours that? 6 hours. That's I already got 5 signals. So they are not long peak. It's from here to here. That should be almost around 40 pips. In this one, lost 10 pips. This one should be maybe whatever it is. So if I want to take small pips during out the day, so I'm considered as a scalper. So I will be scalping out through this chart. And if I don't find any signal here, open new new currency. This is US Japanese yen. Yeah, or if it right now no signal, I can go back to Europe USD, Australian USD, British pound, whatever. Check for different signal. That will be I will be considered as a scalper. And that will, like I will be scalping throughout with different. You see down here, I have how many? I have almost all the currency pairs open here. I don't recommend you to do that, but I do this for a reason. Okay. Um, so that's 1 minute time frame, guys. When we say time frame, this are the one. So from this 1 minute, you see you have how many different buys or candlestick open lot. All right. We insist our look here, 5 minute, 5 minute time frame. Yeah, right here, open. I have only one signal. From there, see, it's less. The bars are less. In the same, they open the same times. Each of these represent 5 minutes. So each of the candlestick represents 5 minute time frame. So whenever 5 minute end, one of these bar will form on the chart. So that's 5 minutes. So it's they're a bit less than compared to the 1 minute. And so I'm still, you see, the last 24 hours, look at from this line to that, that's like 24 hours. These are all the signals that came. If I were to keep checking, and these are the signal on yesterday. So that's the 5 minute I'm still scalping. I'm still considered as a scalper even on 5 minute time frames. Remember, from 1 minute to almost 30 minutes or to 15 minutes are all scalper. Uh, Here I'm on a 15-minute time frame, less bars, little bars, little normal candlesticks on the chart. It gave me 2 signal. So each of these bar here or each of these candlestick represent uh, 15 minutes. Yeah, so whenever 15 minutes finish, it close and it open new bar, new candlestick star, and that period you can trade. And from there, we go to 30 minutes. So you see from this, when the market open it in the morning in Sydney times, I'm not talking about the broker time. Broker time is different from the local time. So if I were to That's 30 minutes. If only 3 bars open there. So now that will be the scalping. So those that trade on these time frames, they are all scalpers, so throughout the day with different pairs, they go through different pairs and looking for signals, little trades to take. They don't like they're trying to get all the opportunity out of the market as much as they can. Get in quick, out of it quickly, so you have to have good strategy to it. You need to know what you are doing, and so I don't recommend that for the new beginners. So I recommend what the here 1 hour time frame. That's our this is the recommendation for the beginners, including myself. We trade 1 hour time frame. So here it started the 24 hours start here. So from here to here, that's 24 hours. So it started there. And so that's the 1 hour we are swim traders. So 1 hour to 4 hours. So we are aiming to get trend, several days or weeks in the market. So if you are trying to look for few entering during the week or during a day, whatever. So we consider as a day traders or swing traders if you are on 4 hours. So the trends are more stable. See, they are more stable. They don't change quickly. See, from here, this gone on how many days? The same trend, 1, 2, 3, 4. It's still going up, and then 1, 2, 3 down trend. So it's a bit stable than the 15 minute, the 30 minute, the 1 minute time frames. So that's daily 1 hour time frame, and then come down to 4 hour time frame. You see, even more stable. See here, each of this one represent uh, uh, I mean 1 week. This is 4 hour time frame from this white line to this line. One line is 1 week. You see, last week started there and it ended here. So and this week just started here. It's still going. It will end here on Friday. So that's like 1 week. So each of these candlestick represent one uh, 4 hours. So 4 hour time frame. So each of the candlestick have 4 hours. So this will be going up in and out, up and down for 4 hours until the 4 hour ended. So that's the one there. So we are considered as a day traders or swing traders. So and so for the long terms traders, we come down to daily. So you see one daily trade. Look, look at this trend from all the way June last year, 2025, to all the way the trend changed bit January 2026. About 6 months, it was going uptrend, uptrend, uptrend for 6 months. So that's how it is. So the trend is even more stable. So it's suitable for the investors, those are willing to hold their position for 1 month, a month to 1 to 6 months, or even a month to a year. And they use this one week daily time frame or weekly time frames for the rare big investors, or monthly time frame. So here, see the 24 hours finish. These are this candlestick will not close until this one here will not close until 24 hours. 4 hours about end, then this bad will close, and then new one will form again. So and then you go weekly. These are the one here. This one until Friday before this back and close here. It open on Monday, but it will close on Friday. Friday midnight, and so it will be closed whatever time the broker using. And then you go monthly, which many people don't really use. So that's the time frame, different time frames with different. So the 1 minute move very fast. See this here, 1 minute here, they move very, very quickly. The price, you will see like the price and go up and down. You see, it changed very quickly compared to the candlestick here. See, it's go up, down very fast, and so you much better. It go up and down more quickly than compared to 1 hour. The 1 hour, see here, it's down here. The 1 minute was telling you it's already up. So these are the different. It move very fast, you know. Uh, so the trend for 1 minute or 15 minutes, they are not really stable. They're quick to change, and they can see this one for how many days is still the same indicator, but this one just for 1 day, you know how many times the trend changed. Look, it went down, up, down. So it all the short reversal trend, it was so the 1 minute will pick it up easily. So guys, yeah, that's why it is. And so how to use the time frame effectively. So the best way is to use multiple time frame. I will show you the example. If I were to be trading on my signal, or this indicator were to be on the example on the uh, daily, I'll take 15 minutes. If it is what I was trading on as a scalper, and before I take this signal here, you open this one, give me signal here. I say up trend. It told me to buy from here. Example, if I were to buy here, before I buy this and confirm this, it's better I compare the multi time frame, which is higher time frame than the 15 minutes. So example, I can go to 1 hour time frame and see the trend direction in 1 hour. Here, even though the price is up, but the 1 hour time frame, if I were to use this one and analyze this as my down trend example, or to draw my trend line, see, I will consider this maybe as a down trend, you know. So I will not recommend taking this trade, because even though that the indicator is telling me go up, but I believe that this price will drop back down, reverse back down. And because my 1 hour is telling me that the trend is a downtrend, even though the price is up, it seems like the trend is about the direction of the trend is about to change. But for now, I will ignore that signal. Remember, there's always opportunity in the market. You don't always have to say, "Oh, I have to take it. Perhaps it will be the right trade." No, look, if you miss it, if the price go and make a good pip, yeah, that was not for you. It didn't the match with your strategy. It didn't match with your trading style. So look for another opportunity. It can't finish. The opportunity don't finish. As long as the market is open, there's always an opportunity, guys. So that's how it is. And so we do that. And so, if, example, if I were trading on the 1 hour time frame here, and then signal tell me to take, I go check, and that was March, 4 hour time frame on the 30th of March. Here, 30th of March was somewhere here. The markets, if I were to follow this blue line here, it's telling me uptrend. You know, 4 hour time frame is telling me uptrend. Yeah, if I draw my trend line, see, it's an uptrend. The reversal just happened. So I would have, I would have not taken that trade. In that trade, because it's going against my trend. You know, the higher time frame is, even though sometimes it can be wrong, because the reason I say it can be wrong, if I go back to my 1 hour time frame on the same thing, see that trade, I don't know what peak is set for, but if I were to set for 100 pips, or they're mostly 200 pips, the trend, because normally for this one, I will always set for 200 pips. So if the market reverse back, here it's still reversing back, because like I said, see, it came down here, it make 100 pips. So if you are setting your profit target on 100 pips, it still make money, but does not mean you are right. You know, it may make money. It's not mean you are doing the right thing. So that's how it is. So and then you see the trend, the the it start reversing back up again because the higher time frame is saying the trend is uptrend. That's why it's good to use multi time frames. That by using multi time frames, you will increase your accuracy of winning and then decrease your losing trade. So it's always to whenever you're trading on 1 hour time frames, always when you have you ready to your strategy or your indicator is telling you to enter in a trade, always confirm with the higher time frames. If you're trading on 4 hour time frame, confirm with daily time frame to measure where the market is. And even if it's going against the higher time frame trend, I recommend not to take that trade. But if you know what you're really doing and you're very good at what you are doing, then why not? You can still take it and you will still make your money sometimes. But I don't think it's not the right thing. Going through the red light and you are successful, you didn't involve yourself in accident. It's not mean that you did good thing. So in a long run, it's not gonna be good for you. In a short run, yes, you can pass, but you will be safe. But in a long run, you will, I'm sure, you will not be the best. Your result will not be the best. So yeah, and one thing I will tell you is over trading, looking at too many time frames can cause confusion and exceeding excessive trading. So and ignoring and higher time frame scalping or day trading without checking the brighter trend can lead to significant losses. So like I said, if you are scalping or your day trader, you just taking indicators, like look at all these indicators, loss, maybe loss, it depends, pips, loss, loss, I lost that trade, win that. It depends. So if you I was just to blindly follow this, look at this, the accuracy of this trade was bad. So that's why always check your higher time frames, multi time frames before confirming your entrance or taking that position. Um, yeah, so at the same time, you don't want to make your set tires be checking multiple time frame, be a check here, check one. It's you kidding yourself. It's very bad. Stick with one, like stick with that, and don't also do too many chat like me, like example. So you hear you will be going, what is he doing? Because I have almost all the chat on one computer. Look, all the pairs, I mean, this all the 28 currency pairs that you know of, the major and the minus one, all here. So I am checking, but I'm not going through all of them during the day, but I check maybe once every 4 hours or 6 hours. I will check them, and I will not spend more than even 2 minutes on each of them. So because I already know what I'm doing, so but for you, I will recommend opening only one, two uh, pairs and trade on that. The major currency, and I think I will recommend that for you. So, guys, like I said, so don't try to confuse yourself. Start it slowly. Even one pair is enough, and know what you're doing, you know. So and try to stick with 1 hours and mostly. So if you want to do scalping because you're new, you want to learn more, you can still do it. But if you have the time just to play with it on a demo, yeah, so but I don't really recommend that. The commonly used time frames are the 1 minute to 15 minutes. Most people they good that know what they are doing, they use that. They just want to join the market, take the take get in and out within 10 to 1 hours. They out of the market, depend they're only going there for 5 to 10 pips, or 20 pips. They hire most of them. So they're not going there for long run like 100 pips. Getting 100 pips during a day in 24 hours is very hard. Sometimes you do, but it's not always okay. So that's how it is. So if you feel like you want to make pips every day, so maybe you can do scalp. You can be scalping the market. You know, you can become a scalper, which is up to you. The time we all have different schedule in our hand. So yeah, that's how time frame work. And then another way is for like 1 to 4 hour. I'm almost commonly used to. So especially you and I as a beginner, we should be sticking with 1 to 4 hour time frame to start with for now. You know, or you can even also do daily. Like if you don't have much time in your hand, just do the daily time frame, and then you can trade on daily time frame. Yeah, you will not have much trade, but if your trade accuracy more accurate, then you can get a lot of pips out of it. Um, yeah, guys. So that's how it work. So remember, each of these candlestick, what they represent, they represent whatever time you select here. That's what they represent. Okay. So that's how it go. That's how it work. Yeah, guys. And please, what can I say? So not much to say. I think there's still a lot of room there to learn. A brighter, there's no limit of learning. So I recommend you go and learn more in your own way. And that so I recommend that. And that yeah, guys. So learn more, get more knowledge, know what time frame is, have good idea of it, and that you will get used to it. And I'm sure that uh, so you will able to select, choose the best time frame for your trading style, because it's all depend on you, the time that you have during the day. We all have different schedules, so your schedule, or not even that, your indicators that you may be using or your strategy you may be using, it depends what time frame has been is the recommendation for that strategy or that indicators. So if it is indicator is the recommendation is 1 hour, then you have to. If it's 15 minutes, then you have to. But yeah, until then, we don't have much to say. You can still learn more about the time frames, and it's not really the big deal about time frame mostly. So it's still the same thing. So it's just different. It's all about just opportunity, like how quick you want to join the market, how many pips you want. That's where it is. How many signals of your indicator or strategy, whose time frame they work with best. So that's up to you guys. So we still have a lot to cover, and like I said, as the time go by, I'll start to stray live. So, but for now, we are all in the educational video, and so a few days from now, and I'll start trading live with my dummy. My strategy is called dummy strategy. You wonder why I name it dummy? Yeah, but it is what it is. You know what I'm saying? So, uh, so go out there, get in, and don't forget always please subscribe and like. Click on the like button so you can't miss out the contents. We have more good contents coming. So please subscribe to the channel, our YouTube channel, Trade with MK, Facebook page, Trade with MK. So the Instagram is Trade with MK. So you can visit our YouTube channel and watch the video there, or our Facebook page. So yeah, guys, thanks for watching today. And it's the daytime here, 2:20 p.m. Have a wonderful day. You're in the night. Hope you enjoy your night, and And so, guys, thank you again. I'll see you and look forward to the next video. And there will be the next one coming tomorrow. We stay on it. And so remember, the first disclaimer is educational purpose only. It's not a professional or financial advice. So you must seek your own financial advice and don't invest where you cannot afford to lose. Trading also involves with risks. So take your time, seek and learn and be patient. Thank you. Have a wonderful day. Bye for now.